The real deal today, and it's going to be trading halts. You know what they are. You see them when a stock's going wild. You want the volatility. You want to play the volatility. But what does it mean, and how can you take advantage of them? So first things first. Why does the stock go into a halt? It goes into a halt for a couple of reasons. Now, one of those, it could just be as simple as news. A company could have news they're going to disseminate. They want to stop trading in the stock, and then they are going to open it back up once that news is out and the market can react to it. Sometimes that's a good trade for you out there. But most of the time when something halts, it's because of volatility. Something has moved too far, too fast, and they're trying to get it under control. That's the purpose of a halt. The good thing about this is it provides us with a chance to look at a stock, peel it back, and see where people want to make a market. Now, before we get into the nuts and bolts of this, I think everybody who trades volatile stocks, especially some of these low float types of runners that are going to halt, you want to have some way to track it. Now, in P Pro 8, where we trade, day trade the world, I have a halt scanner that can show me where the halts are. Trade Ideas, which we use, also has a halt scanner. You can go to NASDAQtrader.com, which I have up here. They're going to have a halt page. Theirs will show you what's the reason, limit up, down, volatility halt. You'll see what's moving, why it's halted, if it's news-based or if it's volatility. So if you're looking for a volatility halt or a volatility halt to give you indications on trades, you'll want to have a resource, as I said, whether it's Trade Ideas, here at Day Trade the World, P Pro 8, proprietary in the platform. If you don't have either of those, NASDAQ traders right there for you. So let's think about the mechanics of what happens when a stock halts, because you'll see this going absolutely nuts. This is Rev B. It's halted multiple times today. That's why I want to bring it up. This opens up, it halts down, it halts up, it halts down, and then it opens back up, actually holds for a bit, and then halts down again. So what's happening as it gets to those levels? Once you hit a halt band, right, especially this one to the downside, what it means is at that particular price, once it's traveled too far, too fast, there's 15 seconds, and within that 15 seconds when it touches the band, it either prints back up because it's gone too far down, or it goes into a halt stage. And it's the same thing in the other direction when you go up. Now that halt can be anywhere, it can be either 5 minutes long for volatility halt or 10 minutes long. So think about what you're trying to accomplish with a halt. You're trying to stop the madness in a stock and establish liquidity replenishment. So the levels, not just where they halt, but where it opens back up, presents an equilibrium price. Not just for the auction, but a place where when everything broke loose, this is where the buyers were able to match the sellers. And that's very important, because what you'll end up seeing here, and this will be a bit of a theme, is where things halt and open back up tend to be pretty key levels in the future. Now, Rev B is going all over the place, but then it halts down at 1640 and it opens at 1640. Then it halts up at 1863, opens back up at that price. It does that dance. It keeps trying to trade away from those halt bands and finds itself equilibriums. So the question you ask yourself is, what can you do with this as a trader? Now, the obvious answer would be, well, use those as entries and exit points. Sometimes it can be that clean. But remember why this is halting in the first place. There's not enough liquidity. It's bound to run stops. If you just throw a line on a chart and say this is where it halted and opened, you're probably going to get your stops run 100% of the time, or like 90% of the time. So you've got to be a little bit more nimble than that. But once you know the general area that's held, there is the first actual halt to the downside that closes underneath that support level right here at about 10 o'clock. Underneath, it opens back up, regaining that level. Suddenly, that bottom gives you a bit of a lower high, and then it consolidates above. I always say this on our live show, I'd rather take consolidations and high day breaks on these crazy stocks because they're too volatile. So if you look at the consolidation, it stops halting every 5 minutes, puts in a higher low, consolidates above the original halt area at that 1640, and then you can work some kind of a long trade in there. You don't have to be first. You just want the stock that's losing its mind to show you the area where the buyers and sellers are comfortable having equilibrium. Once it establishes something like that, then you can look to an entry point, and then you can see this one breaks out a little bit. And the best part about it, look what happens on the way back in. On the way back in, after another series of down halts, it then holds the same low. Now, that's not going to happen every single time, but at least it gives you a level to play off of. Instead of trying to be the person saying this is going to go GameStop and break out the high of the day, sometimes the more reasoned and measured trade is to try to find a spot where you can look for your standard support and resistance. Now, every now and then, it's going to be a little bit cleaner than others. But let's not forget something. It's not just where can you find support and resistance. Sometimes a halt can just be the end of a move. Now, I'm not saying that this particular stock, Pally, this is the middle of the day, it could still go higher from here, all that kind of good stuff. But this is a name which was doubled up in the pre-market, was running, you have no chance to halt until you get the open, and was breaking out tops, it's over $1, all that good stuff, and then suddenly it rejects the high and halts to the downside, right there at 123. So what's the first thing we think about? Okay, well, where's the equilibrium opening back up? Right at the exact same halt price at 123. The first thing it does is try to break the top and fail it. From that point on, that is your wall. It's almost, sometimes it's really clean. This is probably one of the cleaner examples I've seen of it. It immediately fails that equilibrium price of 123, and then 20 minutes later, top. Middle of the day, again at 11:30, the same top, and it just gives you the scalp trade multiple times off of that level. It's not just some random line in a chart where it halts. That, of course, is the band. Think about what it means when it opens up back at that same price and then cannot run away from it. It's an equilibrium. For 5 minutes or for 10 minutes, people have been putting orders in for price discovery. When they discover that price, you are gifted a potentially significant level. All you need to find is a little bit of confluence. It fails a level, there's a lower high, and then you can start shorting off of that level as it stops. That's what we love. Confluence is just something that every trader is going to want, right? It's not just one thing that gets you into a trade. Maybe it is for some people. But if you can find 2 or 3 good reasons, key level, the halt band, maybe a lower high or a higher low that can be put in there, zooming out to a daily chart and potentially finding some levels. Those are all good ways to give you some confluence in trades. And as I said, you're going to, this is an important one, you're always going to want to have some kind of an indicator if you're looking at halts. If your strategy is to find halting stocks or trade volatile type of names, then you're going to want to have a scanner up there to say, okay, well, what's going crazy? What's halting? The top of the list here, showing it to you live, this is NEXI. It halted once at the absolute top. What were we just talking about? We were just talking about, well, what happens when it rejects these equilibrium prices? Open back up, immediately can't get through that halt top at 885. So there's your significant level. It pops in, fails it. I mean, that's really easy. If you have locates on the stock, which I'm guessing you probably don't, it pulls back in, and suddenly you've got yourself a key price at that initial halt entry. Now, the thing about these, and keep in mind this, when you reject something like this up at that top, and you are pulling back, some people say gaps pull back into VWAP. Remember, sometimes you can have a trend continuation. And this is a perfect example of it. So you pull back in, you bounce off VWAP. It also happens to be $8 even, which, whatever, round number. But before I would consider that it's bounced and going to make another move, I want buyers above that halt price. I'm not thinking about break out the top, blindly go long. Because if it rejects it, you could be out 10%. You want it to hold the bid and see buyers above that key price. So yes, you're able to get that pullback. You want to see buyers above this 885, and until you see that there, is the potential of another failed break to the downside. Whenever a halt level ends up that big of a deal, I want to see some serious evidence that it is through that price and that you're not the person trying to make the move, you're the person trying to join the move. Because these halt stocks will rinse you easily. No one ever went broke taking profit, And no one ever lost money when they were not taking a trade or falling into a trap. I would rather miss a couple of massive moves to avoid blowing up on one of these halt style trades. Because when you hit one and it goes, they're volatile and halting for a reason. You're going to get that chance at a big winner. So better to make sure you get that great entry or that patient entry, like we were talking about on something like that Rev B. That patient entry where you see it consolidate and hold the key level for a while. That's the thing. You see the halt bottom hold. You see the consolidation. Then you can get that long. You see it ends up ripping, that's fine. Rather take that trade than try to chase the magic as it's ripping higher and then expecting every halt stock to turn into a GameStop. That's not the way that it goes. Be patient. Understand that those reopens and those halt prices, they're liquidity events. They're going to guide you toward key prices. It's your job to then look for some confluence around those and set up your trades. That's the real deal. We know halts. They're not going to stop happening. So we got to be taking advantage of them if you're trying to trade these low float runners or these gappers.